Welcome to Financial Repression Authority's Roundtable Insight, where the best fund managers, economists, and industry leaders discuss the key investment issues and challenges in the current macroeconomic environment.
Hi, welcome to FRA's Roundtable Insight. This is Richard Bernoulli. Today we have Ira Harris. Ira is an independent trader, successful hedge fund manager, global macro consultant, trading foreign currencies, bonds, commodities, and equities for over 40 years. He was also a CME director from 1997 to 2003. Welcome, Ira.
Richard, nice to have you back from Argentina. Let's see, last time you were in Singapore, so you kind of I can't follow you. You're like Waldo, but here we are.
Sure. Maybe we can begin with feedback on what happened this afternoon, the Federal Reserve FOMC meeting. Your thoughts on Fed Chair Jay Powell's statements and press conference?
Yeah, you know what? It was interesting, and I was just watching CNBC before we started going on, and Rick Santelli hit it right on target. I'm a fan of Rick, so but we don't always agree, but he had it on target because I think Jay Powell, the one good thing he did is he basically said, stop relying on these damn dot plots, because when they go out, the mainstream media loves them because it's an easy way to understand the Fed, or what they think is understanding the Fed, so they can ask questions about it. And he basically said, these are projections, and they kept asking about it. And Powell was very succinct. He said, we made a decision today. The dot plots are projections, and projections, are just that, projections. They're not worth the paper they're written on. And if you follow the Fed and their history with these dot plots, they're a joke. And as I wrote last night, go back to 2016, Art Cashin was far better at comprehending where the economy was than those dot plot projections. And that's just Art being, all that wisdom. So I can't stand these dot plots. As I wrote in the blog last night, he should have raised 50 basis points today and basically put to rest, by doing that, put to rest the dot plots and say, yeah, you know what, we're going to watch things here. But with raising 50 points and holding until that balance sheet shrunk to $3 trillion, I think he would have done the markets a much greater service, because he would have let markets be markets. And if there's one thing I really like about Jay Powell, is he does have an understanding of the way markets works, and he seems to be more willing to let markets work and get rid of the theoretical nonsense that filled the airwaves with these Fed press conferences. So, but he is, I do applaud what he did, except that I really would have liked to have seen 50 basis points and a hold. Not that I'm, bullish or bearish the stocks. I care not about that one way or another, because I'm going to trade what I see anyway and react accordingly. But it would have put the Fed, to me, a much more interesting position. And you know what? They've got to stop kowtowing to the markets. I liked what he was doing while the markets were busy correcting in February, that he even had Dudley say that, a 10% drop is, small potatoes. So we need to become more market focused than Fed focused. That's the end of that story.
Now, instead of the 50 basis points, at the raise being only 25, do you think the Fed's independence is coming under pressure by the U.S. administration, by President Donald Trump?
Not yet, but it will. It will. And you know what? And a lot says about it, again, as I talked about last night, but I'll expound on it, is that, look, you read every central bank release, whether it's the ECB, the Swiss National Bank last week was the paradigm of it, because all they did was really talk about setting policy relative to the value of the currency. The Australian Bank discusses the value of the currency. Every central bank. So, everybody's out there parading this concept of independent central banks. Well, they're all discussing the importance of the currency values when setting their interest rate policy. Certainly the Japanese. So it's all being done. So with Donald Trump wanting to turn around the trade deficits you can't help but say, hey, maybe they actually are onto something because they have an independent central bank. Well, if you have an independent central bank that goes upon its course based on what it's seeing here, based on domestic economic activity, while everybody else is setting it to international standards, then tariffs become the alternative, especially when the Fed is raising interest rates and they're the only central bank really raising interest rates. I know the Bank of England went half a basis point, a quarter of a basis point, and they're projected to go a quarter of a basis point tomorrow, which we'll see. But everybody's looking at the international situation. And when I read the Fed today, there wasn't one statement about it. Of course, we did have Powell and Leo Brainerd discuss headwinds to tailwinds, which is on the growth in the international economy. But everybody looks at their currency values when discussing interest rate policy.
So with the Fed shrinking its balance sheet and raising short-term rates, likely making the U.S. dollar stronger, will that promote tariffs, more on the trade tariffs?
Well, I think if the dollar got stronger, you would see much more action. But the dollar hasn't gotten stronger. So there's something else or a few other things that seem to be weighing on the dollar. Now, Powell was asked about that, and he spoke to, enhanced growth. I'm not sure that there's enhanced growth over in Europe anyway. I need to see a lot more, because if that's the case, then the European equity market should be outperforming. But you know what? They're way underperforming the world's equity market. So I'm not quite buying into that argument yet. But I'm a wait and see person. I need to see more before I'm going to go down that road. But there's many things in play here, which we will see. Which is why we're getting increased volatility on a global basis.
And you've written recently on thoughts by Commerce Secretary Wilbur Ross in terms of there will be no trade war. The trading partners of the U.S. will compromise on trade treaties. How would that factor in the U.S. dollar, like potential U.S. dollar devaluation?
Well, that's right. That's what I call the Kudlow dilemma. Because Kudlow, of course, when he got into his post chairman of the economic advisor, chief economic advisor to the president, he said, king dollar and short gold. Well, not so fast, Larry. First of all, be very careful about this, because if you have king dollar, which Kudlow means a strong dollar. Now, we all like a strong dollar if it's done, if it's affected by good policy. But bad policy and a strong dollar, not such a good thing, and I'm not of that camp that you will grow your way out. You may inflate your way out of your debt problems, but you're not going to grow your way out of the debt problems. So let's get beyond that. And if the dollar got too strong, the impetus from this White House would be to have more tariffs, because they are hell-bent on shrinking this trade deficit. So when Kudlow discusses that, he ought to be very careful about where he's going, because this White House, Peter Navarro and Wilbur Ross, will push for a weaker dollar, because a weaker dollar, as Mnuchin and Wilbur Ross both said in Davos, is sending soldiers to the ramparts in the trade war that exists every day. So that's the Kudlow dilemma. It's going to be interesting to see how he deals with this. But if you were to get a dollar rally, or even what Ambrose Evan Pritchard wrote about earlier in the week when he talked about a possible rip your face off dollar rally, he was quoting what's his name, Ari Paul or Raoul Paul about that. I'd be very, very careful with this administration. They will not tolerate a strong dollar at this point in time.
And if that were to happen, what would be the mechanism to effectuate that through? Would that be through monetary policy of the Fed? Would its independence be compromised?
Yes. That's a very good question. We don't know. But you would have the Treasury Secretary, just like he said in Davos, talking the dollar down, which everybody, took great umbrage at. But we've had that before. One of my issues with Larry Kudlow, and I respect him for his intelligence. He's been around a long time. But one of his, he was a Reagan guy. Well, you know what? The Reagan White House led the battle through James Baker with the Plaza Accord. And the Plaza Accord was an orchestrated attempt to drive the dollar down. And how was it done? Really by sitting everybody down, of course, in the Plaza Hotel and reaching this compromise. Well, pay attention, because the trade deficits are now going to become an issue for Wall Street in a way that they haven't in many, many years, and they're going to starting to affect the movements in the markets. Not quite ready yet, but these algorithms who think that they have factored in every variable that you need and every headline, they're going to be disrupted themselves by the coming impact if the trade deficit continues to grow. This White House will not sit quietly. They've made it an issue, and coming into the elections, this is going to be an important issue for Trump to hold on to his core constituency.
And thinking globally, how do you see everything playing out in terms of trade? You questioned, will Europe introduce measures to protect against Chinese trade, Chinese investment? So you got Europe, Asia, U.S. Like, how do you see it playing out?
Well, we've seen that already. There was that article in the FT earlier in the week talking about how Germany is upset that China is targeting some of the corporate jewels of Germany. And believe me, the French are the most protectionist, trade-oriented, probably going back to, what's his name, Colbert? We're going back hundreds. They are knee-jerk protectionists, and I don't care what Macron says, because he inherited that. It's a long-standing French tradition. So, you know what? As United States leads the battle, you will see that they will all start tailcoating what the White House is trying to accomplish. So while the White House gets beat up today because it's easy to beat on the Trump White House for so many missteps that they make, you watch, the Europeans will be following right on top of this, because they have as much problem with the Chinese, and they run, pretty good trade deficits with the Chinese themselves. So let's pay attention to what really is going to take place here.
And ultimately, could we then get global competitive currency devaluation, another round?
Well, I think we've already had them. Even with the yen at 103, 104, 105, the yen has weakened fairly dramatically, especially against the euro currency, as we've talked about for 3 or 4 years already. That has been an interesting play. And even I think the Europeans, especially the Germans, have had enough of the weakness in the yen. And if you listen to Corona, again, Draghi got very upset in January at Mnuchin and Ross, for, hey, the G20s agreed not to target their currencies. Well, you know what? Who are you fooling? Of course, go read the Swiss statement, from their release last week when they held their interest rates at negative 75 basis points negative, and it's all directed against the currency. And the Japanese, every time you listen to Kuroda talk, well, we're not quite ready. We need to see inflation. That's just a nice way of saying, well, we're going to keep our interest rate policy as it is because it keeps pressure on the currency. It's come on, let's call it what it is. They're all targeting their currency values by using their interest rate policy for domestic purposes. But you know what? Many variables in play here, which is what's leading to the heightened increase in volatility. And as we're talking right now, gold is on its high. Gold's up $23, $24 for the day. Silver's up 45 cents. This is after a Fed increase. The dollar is on its lows. Stone cold on its lows. So what's going on here in the markets, we're going to find out. But there's definitely some significant moves. And most importantly is that the 2-10 yield curve steepened today because, of course, they changed the dot plot where it seems that they're very comfortable that there's only going to be 3 rate rises this year. So everybody thinks that everything's going to be pushed out further. And the Fed is not going to be as aggressive as previously thought. So the yield curve actually, the 2-10 actually steepened out about 3 or 4 basis points as I'm sitting here. Let's see. Yeah, pretty much so.
And do you see President Donald Trump as implementing Section 301 of the 1974 Trade Act, where the president can impose duties if there's like perceived violations of trade agreements?
Yeah, that's such a great lawyerly piece. It's like last week or 2 weeks ago when they were discussing 232 of the Trade Expansion Act of 1962 under Kennedy, which was interesting when that passed in October of 1962. Of course, that was the Cuban Missile Crisis, but they put in these. What is it? It's Section 301 of the Act, right, of 1974.
Yes.
Yeah, they put them in just because that's the only way they can get these trade agreements through is that there's leverage against what they deem to target as unfair traders. So in order to get Congress to be able to sign on to it, there has to be opt-outs based on this or penalties. So yeah, they're going to invoke it. We've seen it before with the Japanese in the 80s and 90s. It was one of the strengths of the Reagan movements to be able to enact 301. They're going to use whatever they can. They try to, like they softened late yesterday. We saw them soften some of their demands, about 50%. Car parts in U.S. autos. They for NAFTA, but they softened on that. And of course, we saw the Mexican peso rally, and the Canadian dollar was very strong today. So yeah, there are all types of mechanisms in place where they're sending messages saying, "Hey, you better sit down and pay attention. We're serious. We put the steel tariffs on. We put the aluminum tariffs on. Yes, we back off a little bit, but we have a lot of tools at our command, and we are serious about righting some of the wrongs that we deem to have been taking place over the last 30 or 40 years." So you must pay attention to it because they've shown that they're serious about this. So they're trying to get better negotiating so that Trump can stand tall and say, see what I did? I've overturned some of these past malpractices, and it's going to help us as business returns to the United States.
Will any of this affect U.S. agricultural exports to China?
Well, it will. There's some rattling. So we're seeing hog prices go down, cattle prices go down, some grain prices, but grains are holding up very well. Even as we're coming into the Brazilian and Argentinian and Uruguayan, the South American harvest, which will bring a lot of supply into the market. Prices are holding up very, very well. Now, the Chinese may threaten U.S. Agriculture. And as Wilbur Ross strategically laid out, I mean, you give them credit because they have done their homework and said, look, they're still going to be buying our soybeans. I'm not buying it. But what Wilbur Ross, I think his timing was wrong on the steel and aluminum because the Chinese, there's so much, Brazil had a record crop this year. So the timing wise is bad. He should have waited about 2 months for the crop to be harvested and for those to all be distributed or to be distributed somewhat, and then laid it out, because then the Chinese would have less flexibility. Right now they have flexibility. They can buy more Brazilian beans right now and stick it to the U.S. farmer, which could really hurt Trump in the November elections because the American farmers are doing very well. This has been a discussion since the famed China lobby going back to the 1940s. The American heartland wants to do business with China. They've always wanted to do business in China. And when they embargoed China, or in the 1940s, and 50s, when Mao came to power, it hurt the American farmer because it took all those, doing business with Taiwan versus the People's Republic of China, stunted American exports to a billion people. The Chinese, number one, have to feed their people. End of story. And their growth of Chinese purchases of soybeans, which is huge, because as their diet changes, it becomes more protein-based, especially with higher grades of protein, meat. So you have to feed those animals. And a lot of soy meal, and the Chinese eat a lot of soybeans. So that demand curve goes ever higher, because that's just not going to change. Because, we're seeing $10 soybeans, which is historically pretty high soybean prices, and that's with record supply. Agriculture actually responds very well to capitalism, which is as prices go higher, they produce more. But the demand from China and other countries that have now, reached middle, much higher per capita incomes, they consume a lot more protein. So prices still remain high, no matter how many beans come on the market.
Yeah, and the soybean meal needed to feed the chickens. There used to be a saying they only had chicken on Chinese New Year, but now they have it every day. Finally, your thoughts on Italy. So recently, you mentioned the markets are underestimating the importance of the current Italian political situation, and your reference to Picasso's dream.
The market has fallen asleep. They think that there's going to be some type of center-based coalition that, everybody's Berlusconi and the league are going to, get tired of trying to deal with five-star. I think it's a gigantic mistake, because 69% of the popular vote in Italy went to the center-right, including five-star. And if you try to push them out in order to form a coalition that pleases the bureaucrats in Brussels and the status quo in Italy, or the elite in Italy, the established elite in Italy, I think you're going to run into a major problem. And I think the market is way underestimating the power, the influence of this. And when you get, again, Ambrose Evans Pritchard writes about it, and Walter and Wolfgang Munch, who I can take or leave most days, but he's been very good with this. In fact, he's been writing and warning about what's taking place, and that you better pay attention to it. It's nothing it's not insignificant, and yet the market seems to want to downplay it. But we'll continue to watch this. I laugh because, we've discussed European financial institutions have a severe problem. And if you look at the stocks on the European banks, Deutsche Bank today was down quite a bit, but all the banks are suffering because the amount of non-performing loans still hasn't been resolved, especially in Italy. So they need to really work this out. And yet Five Star and the league really want to push and say, you know what, we don't care what the restrictions coming from Brussels are about budget deficits. We need to get the economy going. And the Italian economy, even with these ridiculously low interest rates, really has not shown enough growth. And more importantly, with these low interest rates, the debt to GDP ratio in Italy stays, still around 132%, which is enormous, even with much lower borrowing costs. So Italy has, major problems facing it. And as Berlusconi knows, and as Five Star knows, they're going to get their way, because Italy is not Greece. Italy is far too big, and their impact upon the entire global financial system therefore becomes much greater as to how this all works out. So this is a very interesting time, and yet the market is complacently trying to look past it, but I would be very, very skeptical about that.
Wow, great insight, Ira. How can our listeners learn more about your work?
Well, you can certainly go to the Financial Repression Authority. We have a treasure trove of discussions, but on a daily and weekly basis, of course, I blog at Notes from Underground, which you can get and register for free if you go to iraharris.com, YRAHARRIS.com. You'll be able to access it. And as much as I write, the respondents to the blog are at such a high level of discourse that really makes it a must-go-to place, because we really discuss very important things, and it's done at a very high level, I'm proud to say.
Yeah, excellent. Yeah. Great. Thank you very much, Ira. Thank you.
Richard, thank you for the opportunity. As always, we do get into to take a good look under the hood, as we say.
Yep. And we'll do it again another time. Thank you, Ira.
The FRA Roundtable Insight Show is for informational and educational purposes only, and should not be considered as a solicitation or offer to purchase or sell any securities. The investments, investment strategies, and investment philosophies discussed or presented on the show each involve their own unique risk factors, which are not discussed on the show. Any discussions among the panel participants or responses to listener inquiries are based on the personal opinions of the panel participants and do not take into consideration the listener's suitability, objectives, or risk tolerance. Please be advised that you invest or speculate at your own risk.